What if you can invest in the companies building the future of artificial intelligence and get paid over 35% a year to do it? I'm talking about monthly cash flow, exposure to companies like NVIDIA and Palantir, and a covered call strategy that actually uses real stocks, not synthetic options. And most people, they've never even heard of this fund. But I've got over $25,000 of my own money in it so you can learn from it. And in just a few months, it's become one of the most interesting income plays in my portfolio. So stick around, I'll walk you through the performance, the payout, and exactly why I'm bullish on this high yield AI strategy. Let's go. Welcome back all, Rico here, testing out a new mic. If you're new here, I share my portfolio and picks while also helping you shift the way you think about your career, your life, and your money. And if that's what you enjoy, a like and subscribe would really help out the channel. And as always, this is not investing advice, just my thoughts and experience. Always do your own research and never follow blindly on YouTube. This is just for entertainment and inspiration. So I love Snowball Analytics, and I do all my analysis and I get all my information about my portfolio and my future dividends, all my analysis from Snowball Analytics. So if you click on the link below, I am an affiliate and I will get a small commission. But if you are interested in Snowball, you can get a free trial, use my code, and then see if you like it. It's helped me, it's been a game changer for me in terms of predicting my dividends and helping me make decisions. With that, back to the video. All right, that being said, let's start with what the fund does. And today we're talking about AIPI, the Rex AI Equity Premium Income ETF. And their core formula, it's simple. Own AI stocks, write covered calls, generate enhanced monthly income. That's it. Pretty straightforward. And I'm going to read straight from the prospectus and we'll talk about what it really means in a second. So the fund generates current income from option premiums writing, i.e. selling covered call options on the fund's portfolio securities. The fund intends to write call options on approximately 100% of its holdings of each portfolio security and will not write call options on securities that the fund does not hold, meaning no synthetics. So what does all that mean for us? For me, the fund sells covered calls only on stock it actually owns. It doesn't use synthetic options. You get real equity exposure with real income on top of it. And if you followed me for a while, I always prefer ETFs that hold the underlying. And it's for good reason. You can better participate in capital appreciation of those stocks. You have a lower risk of tracking errors. If those underlying stocks, they pay dividends, you can benefit from those still. And for me, the most important reason is these funds tend to be way more transparent than those that use ELNs or synthetics. To me, that makes AIPI one of the few income-focused AI funds that's still rooted in fundamentals. And just for definition, here's how it defines AI. AI hardware like NVIDIA and AMD, AI software like Palantir and Synopsys, AI infrastructure like Supermicro and Arista Networks, and then AI services like CrowdStrike and Cadence. And you're not just betting on AI buzz, you're investing in the entire AI ecosystem with this ETF. Now here is a snapshot of the top holdings, and you'll see the biggest holding is Palantir right now, but they rebalance this all the time. NVIDIA is the next biggest, then CrowdStrike, ARM Holdings, Supermicro Computer, AMD, which I got out of, but I held, Synopsys, Cadence Design Systems, plus some cash equivalents just for stability of the ETF. Now it tracks the BITA AI Leader Select Index, which is rebalanced monthly, which I mentioned earlier, and it's reconstituted quarterly, meaning the portfolio stays current with AI market shifts and company performance. And again, AIPI holds the underlying shares. There's no synthetic games here, which I love, by the way, if I didn't mention it already. Okay. Now let's get to the meat and potatoes. Let's talk cash flow. This fund has been cranking out monthly dividends in the range of $1.10 to $1.48 per share. As of today, the annual payout per share is about $15.25, and it's yielding over 35%. And personally, I've received over $1,400 in distributions so far, and I've only been in it for a little under 2 months. And my 1 year forward income is projected at $9,400 a year. That's a 36% yield on cost for me. This is real, dependable monthly income that I can reinvest, use to live off of, or compound, which I'm doing all three. So how has it performed for me? Well, I own just over 617 shares with a cost basis of $41.99. And my current position is worth just under $27,000. And here's the breakdown. So the total profit that I've had since being in this fund is just over $2,000, and I've had an internal rate of return of over 16%. And what I love is that I'm giving myself a raise every month by reinvesting part of my distributions back into the fund. And that's the beauty of combining income and conviction. Yes, and continuing to build my snowball. Now, let's talk a little bit about the price side. So AIPI started the year near $51, but like many high growth tech and AI funds, it got hit hard by macro sentiment, Liberation Day tariffs, and tech volatility. And at one point it dropped to $35.69. But since bottoming out, it's been climbing steadily. You can even look at my cost basis in the 40s, right? And so over the last 3 months, it's up 8.87%, showing stability and resilience even as the market remains cautious on tech. And the best part, dividends never stopped. Even during Liberation Day, they still paid. And let me be clear, I'm not just holding this fund because of the yield, although some people may. Whether you may not even like AI and you may hold this because of the yield. But personally, I'm holding it because I'm an AI optimist. I spent decades in the creative executive world, leading teams, building studios, and yes, I know how some creatives feel threatened by AI. But I see this moment as the next evolution, not the end. Much like the printing press did, even Photoshop, smartphones, AI is another leap in capability. It's uncomfortable for sure at first, but it always creates more opportunity, not less. And it's also you either adapt and you move on or you get left behind. And AIPI is my way of participating in that growth while generating real cash flow along the way. I believe in the industry, I believe in these companies, and I'm putting my money behind that belief. The question is, would you invest in a fund that pays you monthly yields over 35% and gives you exposure to the companies building the next great technological revolution? Let me know in the comments below. Are you holding AIPI? Are you still skeptical? Are you bullish? Are you bearish? Or are you thinking of adding it to your watch list? I'd definitely love to keep the conversation going, so comment down below. I love hearing from you. As always, hit like if this was helpful for you, subscribe if you haven't already, and if you want these income-focused investing breakdowns, I do them every week. Thank you so much for watching. Remember, if it doesn't challenge you, it doesn't change you. Take care, everyone, and I'll see you next time. Boom.